Hi, this is Nos Biggs with Szeri Nos Biggs Trading, and I'm coming to you with one great offer. You've already seen the first video where we said that Pound Aussie could be the trade of the year, and we suggested to you that based on the monthly chart, we would recommending hedging. And we said that you should probably hedge with a bias short. Good morning, this is Nos Biggs with Szeri Nos Biggs Trading, and we're updating our trade of the year, Pound Aussie. And we're currently examining two trades, both that were taken on the 29th, right at the morning. Notice here. And as you can see, they're currently in profitability, and these are taken and shown on the M30 platform. Now, remember, we said that you needed to be hedged with a biased short because the target was closer to the demand than it was the supply. And we said that whales will typically want to buy at these two levels. There's one right below it, see? And retail fish are typically eaten at this level. Because over here, they bought this breakout. And they bought while the whale was selling and selling. And then the whale exhausts, which means he just violently moves up. And the retail guys say, that's a breakout. And they buy it. And then the whale simply dives. And all the way down, the little retail guy who has bought it all the way up says, oh no, what am I going to do? It'll go back. And so there's a jerk, there's a jerk, there's a jerk. Then there's a plateau, and the retail guy who has bought way up here at this 178 level says, oh, it's going to be fine. And then it further down, and then it washes around and washes around. And the retail guy capitulates. He sells it. And that's exactly where the whale wants to buy it. But he didn't get enough because there's the order imbalance. So he's taking it back up. But now he's got the retail trader completely confused. So all bets are off for the retail guy. He just either gives up, stays out of the way, or continues to get whipsawed. Now, what we've done is we've chosen to hedge because of this. We know that this period from August 2016 to August 2017, a year, was consolidation. That's the whale buying everything he wants to buy at that level. And then those 3 months, 3 white soldiers with an engulf, seemed to indicate that everything was fine and the whale was going to surface all the way up to 217. But last month, there was a major change. And the reason that we hedged is because we don't trust candle patterns that are not in zones. So while this is a bearish engulf, it's not in a defined supply or demand zone. So we decided we would hedge because we know that this price right here eventually will go here. But we think everything is going to come back down in here at least one more time. So that's the logic. That's why we're hedged. Now let's take a look at what it looks like on the weekly. The weekly has a pin, and a pin is an example of a situation where the price wanted to go here, but there wasn't enough interest to continue buying. And so it drops violently, and now we're headed back down. So look at the daily. Daily is very comfortable. Now what I'm looking for right now is a justification to close these two trades. On the H4, there's no justification to close it. On the H1, there's no justification. Oh, there we go. There's a little bit of a zone. So we could, at this point, pull our take profits down here. Let's look at what M30 would show. M30 would agree. This is M30, and we have two sell orders from 129, one at 55 minutes, and one at 4 hours 58 minutes. M15, M5. And that looks beautiful. See how these two cells were in the supply zone? Now we didn't use the M5 to do this, but these two little movements here give you reason to pause, and you may want to take those and close them because you could get a reaction. Let's look at one more chart, M1. There's why we close it. See this demand zone in here that was formed about 1400 hours? That's going to give us some slogging around to do. And so what we may want to do, and what we're going to do, is we're going to close. And we're going to plot and show you why. You can see that these weren't taken on M5. Hold on just a moment. Let me get this out of auto arrange. I'm going to do a video sometime for you guys about all the tricks and features of MetaTrader 4, because when I was learning to trade, my mentor teacher, Ken Mann with Ace Gazette, he was not very nice about helping. And he made me explore the chart, and I found a lot of things that I probably would never have found. Okay, so those are the two trades, one at 55 and one at 458. And you can tell that the M1 chart doesn't make sense, plotting it out. M5 doesn't make sense. M15 starts to make a little sense. M30, there was a zone that broke in this M30 area, and it took itself up another 60 pips. Now that starts to look reasonable, because what happens is when you see trades from us where there's no zone, you can rest assured that there was a zone, but in this case it was consumed. H1 zones are not reliable. Now this shows clearly that this was a continuation. You had an engulf, 3 soldiers, a basing, and then further down. So that's probably where we took this thing. Now, but what we're going to do is we're going to go ahead and get back in the trade, but we're going to get back in based on M1. What we're going to do is we're going to set some pendings. We're going to set a pending order at about 173.90. Market execution, pending order, sell limit, 1.7388. And it really doesn't matter where we set our our take profit, because we're going to move it in just a minute. Okay, so that's the pending order, sell limit 173.88, and no stop loss, so we place. Now, once it's there, that's the sell limit we just put in. Notice how it's going up again? So you take this and move it up to there. And then you can sort of see, you hit modify, or even yet, it's easier to do this. Just pull it down. Notice over here, it tells you how much you're going to earn. This is assuming that it came from its current price. See? See, that's even. And what we're asking is, what have we, or what are we going to earn from here? So, what we want to do is we want to do a calculation. And it won't let us do that, so we have to modify 1.7365. And we're set. Now, you may say, well, it could go lower. It could go lower from this point right here. It could. But the prudent thing to do is to go back up into the area and see how it's at M5. Where is it on M15? See where that little basing area was we were talking about a moment ago? And all we're asking for is a little bit of a retracement. And, you know, you could say, well, why didn't you stay in the trade? It would cost you commissions. Well, the commissions are very small. And what I have found is when you have your broker earning money at the rate you are, for some reason, he's less likely to stop hunching and do the things that make it harder for a retail guy to trade. So, this is the second day of the trade of the year. This is Pound Aussie H4, and we've just closed, and we're getting a little bit of a pin reaction. Let's look at that a little bit more. So the reason we took those trades was because it was a basing period for about 16 hours. And then we got it engulfed. But again, it's not at a defined zone, so we're not comfortable with that. But there it is. There's the pin rejection on the daily. Combo engulf. Add these two together. That combination is over there. So let's do a rectangular shape to show you where the combo engulf is. The combo engulf is taking this candle and merging them together so that it forms an engulfing. And Nissen talks a lot about that. This is one of the patterns that I have learned to love with him, particularly when you're trading with higher time frames. Let's look at the weekly. And what we see is that we can move this and let's let the chart do itself. So now we have a pin rejection from the weekly supply, and we have a nice move downward. And we're going to paint a nice weekly candle all the way down, hopefully. Let's go ahead and move this and move this. Now all I'm doing is I'm holding my mouse cursor, and I'm left clicking. You can set your mouse up differently, but I set it up so that you place the cursor on the line, left click, hold it down, and pull. That's all you have to do to reset a price, target, or a sell limit. Anything that you want to do. So right now, we remember that the whale wants to buy down in here, or here, and the retail fish have been eaten, and now they're just ready to, the whale just is digesting them up. So we've cashed about $6,000 on the trade of the year. Remember, we said that the Pound Aussie is the trade that's going to give and give and give all year. Hope you enjoyed this lesson, It's a little bit long, but hopefully you enjoyed it and gained something. We're Nos Biggs with Szeri Nos Biggs. We're getting ready to do a series of videos called Forex Trading for Millennials, Forex Trading for Gamers, Forex Trading for a Second Career, Forex Trading for Women. And if you have ideas about the kinds of topics you would like us to address, let us know and we'll see if we can help you along with this. One of the things, and I'll close with this thought, one of the things that as I review our competition, their videos, they're always sitting in front of these big fancy computer screens with all these fancy charts and graphs and these indicators, and things are moving back and forth. Well, it doesn't have to be that complicated. My uncle hunted for years with a bow and arrow, deer. And he got more satisfaction out of getting that big buck with that deer than all those guys with those high-powered rifles sitting up in there in those blinds who simply fed corn, had the deer come in, and shot him at point-blank range. So the Trader's Sanctuary is actually open, and we're waiting for you. Come learn to do what we do in the way that we do it. This is Nos Biggs with Szeri Nos Biggs Trading, saying goodbye, and we'll update you regularly. Take care.